The Money Show. Personal finance.
Warren Ingram from Galileo Capital. Have you changed your opinion on Bitcoin completely now after listening to Stuart Thompson, the brewer, who actually sold useful real-world product for ones and zeros?
No, I think the last part of what he said is really the most valuable, part of that conversation. So it doesn't change my view on Bitcoin at all, actually, or cryptocurrencies in general. I think they are going to be an extremely efficient way of transacting in the future. So no, I'm more than comfortable with his view. I agree with it. I think he's probably looking through what's going on right now and saying in the future, this will be a really valuable way of transacting, and that's what's important about that. It's not saying it's going to be a very valuable asset to own. That's the
yeah. I mean, there are 1,324 at last count cryptocurrencies in the world. Bitcoin is just one of those cryptocurrencies. It happens to be the sexiest, the funkiest, got the greatest logo. Everybody's talking about it. A colleague came into the studio just as we were going into Eyewitness News and says, "Should I buy Bitcoin? What's the best platform to use?" And I said to him, before you do anything, listen to Uncle Warren, because Uncle Warren's going to give you some lessons about Bitcoin. Bitcoin yesterday, as I was saying to Stuart Thompson, starts the day at 9,500, hits 10,000, 2 weeks after going through 9. And then 9 hours later hits 11,000, and then there's a flat panic in Bitcoin. It goes back to 9.5, and it's sitting at $9,300 per Bitcoin, 160,000 odd rand for Bitcoin, and it's got the smell of the most beautiful, voluptuous tulip about it. It's got every and the tulip mania of the 1700s in Holland must have felt a bit like this. Everybody is suffering from FOMO. Anyone who's not in has got FOMO over this.
I think it's a fabulous point, and everybody who is in, is almost fundamentalist in their belief in the investment, and that it can only go up, and that anybody that's skeptical is either an idiot or just jealous, envious, and I think that's the difficulty with the situation that we see with Bitcoin now is it's become an emotive issue. People are buying it because they expect to be able to sell them in a very short space of time at a very significant profit. That's their only basis for buying it right now. I'm not saying that the early people that were in Bitcoin, right from the beginning and the early adopters, that there's no merit in why they bought the coin in the first place. That's not the conversation here. Now it's a conversation of saying, when I go to my hairdresser, and she's fantastic, and she's asking me about Bitcoin and telling me that her husband is also considering it, and he works in the motor industry. I'm starting to think, my hairdresser is extremely dangerous for markets. Every time she starts to talk to me about an investment asset class, I know it's time to get out. And that's where we are now. So now it is a conversation that's gone from the early adopters, the really advanced techies, to sort of the initial investment people that were looking for things to do differently, and people like Stuart who would look at it as a way of fundamentally changing the way that the world works in terms of money and transactions. Now it's not that anymore. Those aren't the people that are buying right now. Now it's people that are saying, "Gee, I missed out on the rise from 1 to 5,000 to 8,000, etc. This thing's never going to stop. I'm going to buy now just because it's going to go up." And that's a terrible reason to buy any investment.
I don't know. It sounds like a pretty good reason for me. If somebody could guarantee it, something would only go up, I'd happily buy it. But I mean, your superhero. I mean, if there is Superman in your world, it's the man called John Bogle, or Jack Bogle, the founder of Vanguard, the granddaddy, if you like, of index funds. What has he been saying about Bitcoins?
So he would say that if you look at it as an asset, so forget about the technology and the ability to transact all of those things. Now you're saying, I want to quantify this as an asset, and it must stand up against other assets that I could possibly buy, and that would mean, for example, buying gold, buying a government bond, buying a share, buying a business, buying a property, etc., etc. What is it that Bitcoin actually can generate for me as an investor, so that I can value it and expect a reasonable rate of return? And that means, what interest does it pay? Well, it doesn't pay interest because it's not an interest-paying thing. It's a method of transaction. In other words, it generates as much interest as if you and I had to start writing checks again. That piece of paper that we write the check on doesn't on its own do anything, and that is Bitcoin at the moment. And very similar to gold, actually. Gold on its own, when it's sitting there, on the table, and you've got your gold bar, it's doing nothing. It only goes up or down in price because someone is fearful and would like to buy more gold, or is getting greedy and wants to sell it. So it doesn't generate anything, and that's what Bogle's is saying. That he would say, let's start talking about Bitcoin once it's gone from the current levels, and he's saying it's extremely possible that it could hit $20,000, no problem. But he'll start chatting to people about Bitcoin when it goes all the way back to $100. And he's a smart guy. He's a revolutionary guy in many ways.
You begin to feel a bit stupid when you're the kippie who is saying, no, it's a bubble. No, it's crazy. You got to be mad to buy this thing. And ever since I started saying that, its price has doubled.
So I think we've got to distinguish between two things, because what's going to happen on our Twitter timelines now is that all the Bitcoin fundamentalists are going to be spamming us and abusing us again, saying that we're stupid, we don't understand what Bitcoin's all about, and that's very possibly true. I can't claim to understand all the intricacies of the technology of Bitcoin, but what I do understand is people, and I understand how and why they make investment decisions. And that's really what we've got to distinguish as. Right now, this is not a conversation about the benefits of cryptocurrencies and what's going on with the way they are going to change how business gets done. I agree that they are going to do that. What this is right now is people jumping on a bandwagon because they just have this fear of missing out on some profit. And it reminds me so much of my other superhero, Warren Buffett. Right in the late 1990s, he was really public and very vociferous about not buying tech companies. And the very simple reason was he couldn't understand what the value was that was being created by those companies and why their share prices were going up 20, 30, 40% in a year. So he said, I'm quite happy to miss out on that because I don't understand it, so I'm going to sit by and watch it. He wasn't commenting on the technology that those companies were creating and the way they were going to change business. He was saying, I don't understand the valuation of these businesses now. And he said, I'm more than happy to miss out on something I don't understand, because a lost profit is not a loss. What he doesn't want to do is put money into something and suddenly it goes from 1,000 down to 10. That's a real loss. You're never going to recover that.
I don't want to accuse him of sour grapes or changing his mind or anything, but this year's annual general meeting, which I was lucky enough to attend, he was bemoaning the fact that he hadn't invested in Google. He hadn't invested in Amazon because he hadn't understood them. He said, his insurance company, what's the insurance company called? Geico. He said they were running Geico ads on Google, and they were getting the bills to pay for the advertising. And even then, they looked at it and they said, well, it doesn't cost them anything to distribute this advert. We're paying them $10 a click or whatever it is for our Geico ads. And even then, he says, we didn't get it. And now he looks at Google and he looks at Amazon and he's got serious FOMO. That's the danger of not leaping in, Warren.
There's no danger there.
You regret it in your old age and you think to yourself, could have been so rich had I just done this.
I don't agree. So to me, there's no danger there. There's no danger. You haven't lost anything. It's like, every time the lotto goes on TV and I haven't bought a ticket, I've lost nothing. And, there's nothing. I haven't paid money to get a zero return or the potential for loss. And I think that's the point when you make an investment decision. You need to say to yourself, rule number one, and learn from people like Warren Buffett is, try and make sure you're not going to lose money. It's not possible to do it with every investment decision. And the way you would do that is you would say, I'm going to buy something which I can reasonably create a value for. I can create an understanding of the value of this thing, and it's worth, let's say it's worth R1, but I'm able at the moment to buy it for 80 cents. In other words, there's a margin of safety there of 20 cents to get it to the R1. That's a sound investment decision. That's how you value something. And so if something then really does shoot through the roof and you didn't buy it, what if you haven't lost a cent? Yes, there's an opportunity cost of a profit that you didn't make, but I mean, people buying Bitcoin right now at $9,500 simply because they think it's going to go up. What happens if Bogle's right and it goes from $9,500 all the way down to $100? That's an absolute permanent, devastating loss of capital, especially if they're going in with their life savings. And that's what's going to happen now.
But what if it goes from 10,000 to 20,000?
And then you've got to decide, okay, so I'm on the merry-go-round and I've got to decide to get off before it hits the wall. Because if it hits the wall, my 20,000 goes to zero. And what's interesting is I was dealing with a really smart tech person who happens to own quite a lot of Bitcoin that he bought quite some time ago. And he said to me, I have no doubt that this thing will carry on running for a couple of months, and then I'm jumping off. Then I'm going to take my money and I'm going to go. And he says, I'm looking at these other coins, and the decision, the way he's buying into these coins now is what promoter of a coin has the best possibility to create the most hype. That's all he's worried about, is who will create the most hype and get their coin, get the buyers of his coins most excited, because that's why the price will go up.
The only reason that Bitcoin prices are going up the way they are is because everybody's talking about it and everybody is anticipating the price is going up. And that's great until everybody starts anticipating that the price will go down.
And we see, I think it's starting tomorrow, if I'm not mistaken. You'll be able to trade derivatives on Bitcoin.
So you'll be able to put down 10 Rand, get 100 Rands worth, and if it falls to 1, you'll have to pay 99.
Yeah, so if you were buying Bitcoin that at the moment on the speculation that it's going to go up, that means you're betting on other people taking a view on Bitcoin. What's going to happen with derivatives is it now becomes a bet on a bet. And remember, now that it becomes derivatives, the big institutions can come into this, and what they'll start to do is manipulate this thing their way. So they can just as easily short it. In other words, they're going to want to make money out of Bitcoin falling. So they'll create enough hype in the opposite direction, enough fear, to then get the price to drop. And they'll make profit out of that. So when you're in this situation with people betting on bets, just know that you're not really buying a fundamental investment anymore.
Warren
Yes,
Ingram
it will be around.
We need to leave it there. But yeah, I think you've made your point very successfully.
Thank you, sir.
He called me sir. Oh, have the rest of the evening off. Warren Ingram from Galileo Capital talking Bitcoin. And yeah, it's not about criticizing the technology. It's not criticizing what it will offer into the future, but it is saying fools go where angels fear to tread.